The Federal Reserve meeting this weekend is likely to hold interest rates steady this time around, despite President Trump's calls for rates to drop immediately. Joining us right now is Robert Kaplan, Goldman Sachs' vice chairman and former Dallas Fed president. Good morning to you. Let's just start right there. Is it the right call to stay steady at this point, and then we'll get into the Trump of it all?
Yes, it's the right call to stay steady. Inflation progress is maybe not stalled, but it's going sideways, and you've got 4 or 5 big structural changes underway and about to unfold. And so, the right thing to do is to do nothing in this meeting.
Okay, but getting to some detail about what you just said there, which is you said there's about 4 or 5 things that are about to unfold. What's on that list for you?
So, first of all, you've got potential government spending cuts or an ability to bend the curve of government, so-called DOGE, and a shift away from government-directed spending. I think people know that's coming, but I don't think they realize that's likely to be disinflationary, and we're going to have to see what they're able to do and how that unfolds. You're going to have the beginning of a regulatory review, economy-wide, in every industry that is intended to improve productivity growth. You're going to have an effort to improve the efficiency of the whole energy sector, not only encourage more drilling, but pipelines, processing, et cetera. But on the other hand, all those 3 things could be disinflationary. The 2 that we got to watch, one, we're deporting illegal immigrants, some fraction of them. We just don't know how far that's going to go, and is it going to go so far as to make costs in the labor force, particularly service sector costs, sticky? Are we going to actually shrink the workforce? Are we going to just limit the growth on the margin? And we don't know the answer to that yet. And then on tariffs, is it a negotiating tool? Are we going to do them across the board? And the big question for me on tariffs, if you're going to do tariffs on certain countries, I think it's essential that we leave open this corridor between Canada and Mexico and the U.S., because many U.S. companies use Mexico, for example, for intermediate goods that allow them to domicile here. But the point is, we don't know what the decisions on that are going to be. And so we've just got to wait and see how it unfolds.
Robert, I agree with virtually everything you just said, though I'm surprised that you're raising these issues. In part because one of the things that Jay Powell and I think so many members of the Fed board like to say, at least, is we can't really try to project out what's going to happen on the fiscal side. We don't know what Congress is or isn't going to do. We can't really try to anticipate what President Trump is going to do. We need to watch and wait, in which case you will invariably be 2 or 3 months late on just about anything, because you need to sort of watch and wait to see the numbers come through.
Yeah. So, and they're right. So privately, I would be in my former seat, and in my current seat, I'd be talking about all these structural changes actively with my team. And as I'm doing right now with clients and our own team here at Goldman Sachs. However, in terms of policy, I want to wait until I'm clear on what's going on before I leap into it, because it's uncertain. I think what Trump, as you can see, is trying to do is get the Fed to look through some of these changes. And I think what I think is important to do for the Fed is be patient. Right. Don't act until you have confidence about what the picture looks like. And I don't know how long that will take. I know it's not January, and I'd be open-minded about when it will be, but I know it's not January.
Robert, I don't know if you had a chance to see Face the Nation yesterday, but J.D. Vance was interviewed and specifically was talking about trying to bring the price down of groceries, specifically spoke about trying to bring the price of oil down, arguing effectively that if you can get the price of oil down, therefore the cost of shipping and delivery and everything else goes down. Do you think that's going to happen? How quickly is that going to happen? How should folks in the market be thinking about that?
I think they're absolutely going to try. And so they're going to ease permitting for refineries. They're going to ease regulation for refineries, which process gasoline. They're going to make transmission, if they can, easier, through pipelines. They're going to encourage not only the industry here, but Saudi Arabia to drill more. The tension there is going to be the industry is happy to drill in the 80s or high 70s, not as happy in the 60s. But I think this administration really wants to get the price down into the 60s or below. So there'll be some tension. But yes, I think they are very determined to do that.
And then what do you make, though, of the sort of, the sort of jawboning piece of it, which is about Jay Powell, about the Fed? You've now heard a number of times where President Trump has come out and publicly declared that he should have lower interest rates. I know you're going to say he's independent, but how much of that just can live rent-free inside the heads of people who are on the Federal Reserve? Yeah,
so this is where, for me, the best way to approach this is take it one meeting at a time, keep an open mind. What Trump obviously would love them to do is speed their analysis, speed their assessment of these new policies, and act sooner even than what they're comfortable. And I think that the job of the folks at the Fed in this case is to do their analysis and don't act until you have confidence. The other issue is inflation progress is going sideways. And so I think at 4.25, 4.5, I don't think it's wise to cut any further. And so that's another reason to pause. Having said all that, if you really see progress soon on government spending cuts and other actions, I think the big surprise may be, people are concerned about tariffs, and I am too, and about labor force growth. I think the surprise may be more organic CapEx versus government-directed CapEx may turn out to have a more positive effect on inflation than we believe. But we don't know yet, and we have to let it unfold.